I'm Scott Helpstein, Head of Investment Strategy at Global X ETFs, and you're watching Taking Stock.
Let's do it, folks. 2 minutes to go here into the close on this Friday Eve. It is Tuesday, December 23rd. Tail of the tape for the major market indexes. Kind of mixed territory. We did have a little bit of selling for the S&P 500 earlier today, but the tail of the tape on this Friday Eve is expected to be a positive one. In fact, a record-setting one for the S&P 500. So long as we clear 6901, we will, for the first time since Thursday, December 11th, have a fresh round of all-time highs for the S&P 500 on this trading Tuesday. Telecom, energy, technology shares, and utility stocks, those are your strongest performing sectors in the S&P 500 today, though we are seeing some losses to the downside and weak breadth overall across the NASDAQ and the New York Stock Exchange. Losses including names like Staples, healthcare, and real estate. We are seeing new all-time highs for precious metals as well. We'll talk much more about gold and silver coming up here on the broadcast. And welcome to the show, one and all. You're watching a special holiday edition of Taking Stock. I'm your host here at the big board, JD Durkin. Mere moments away, my friends, from the ringing of the one, the only, the truly iconic closing bell here at the New York Stock Exchange. We got the incredible team from Little St. Nick Foundation set to ring the closing bell, and they will soon be on the broadcast. Yields flat on the day after a hotter than expected Q3 GDP print. We'll talk about that, as well as the crypto major price action that saw Bitcoin fall back down to about an 87.50 level. We'll talk much more about that and everything else on the hearts and minds of investors across the major market indexes. It's time now for the bell. Gotta hit the sounding block with some authority. That's the way we do it to bring about a close to today's price action. Final tail of the tape on this Tuesday, December 23rd. We got the S&P 500 up, let's call it 0.4%. The Dow up 1/10. The NYSE Composite Index, call it, let's say 0.2. The small caps bearing the worst of that rotation today. The Russell 2000 will finish down about 0.7%. But as of today, mark your calendars, a day in history, Tuesday, December 23rd, a fresh all-time high for the S&P 500. Final tail of the tape, 6909.77. Advance to declines telling us breadth leaning negative across the tape. More than 125 NYSE listed companies reaching a fresh 52-week high here on Wall Street today. Let's bring in our first guest. This is Jeff Blazek. He is the co-CIO multi-asset of Neuberger Berman, making his debut here on Taking Stock. My man, the best to you for the holidays, and thank you for being here today.
Happy holidays. Glad to be here on a fresh all-time high, too.
You're not kidding. So we got the big board here at the New York Stock Exchange. I love looking up at this thing. I wasn't expecting all-time highs today, given we had some negative price action for the S&P today. What's been top of your mind for you? Lower volume overall, but what are you tracking these days?
Well, the lower volume, we expect that, but it's been an interesting year. It's hard to believe how much we've come off those lows. We were near a bear market post-Liberation Day, a major rally. We're getting close to 20% gains on the S&P. And in our view, we think it's full speed ahead. We think it's going to remain quite robust in terms of investor gains in 2026.
Do you have either a price target for the S&P 500 for this time next year, your general expectations for how you see the new year going?
Yeah, we don't necessarily maintain a target, but what I'll tell you is the current run rate of earnings is about 10 to 12% for the U.S. stocks, and we inform that, let's say multiples are stable, that would suggest low double-digit returns are not out of the question for the S&P 500.
Yeah, tomorrow, of course, is Christmas Eve. It kicks off one of our favorite calendar-based indicators, the so-called Santa Claus rally for the year, the final 5 trading days of the year, plus the first 2 of the new year. What are your expectations here, again, given some of the seasonality concerns and pressures for investors?
Yeah, we see no reason for those seasonal patterns not to persist. And by the way, when we look into the first quarter of 2026, we're very excited about the fiscal stimulus we're going to see from the OBBBA. So the average American taxpayer, based on our calculations, is going to get about $800 to $1,000 per household by virtue of higher deductions and other benefits from the tax law. So that's going to be a very big fiscal impulse to start the year next year.
Yeah, Jeff, I don't know how closely you followed, but we did get a far hotter than expected GDP print earlier this morning. Reliable government data, been kind of tough to come by given how long the government shutdown was, but 4.3%, that's a lot hotter cover off the ball than people had been expecting.
Yeah, our team is looking at that closely, but you're right, we should take this with a major grain of salt. The data, the inflation numbers in particular, had a lot of errors and omissions that we have to factor in. But I think it speaks to the fact that nominal GDP, real GDP is on a solid trend now that the worst of the tariff noise is behind us.
What do you do if you are a voting official at the FOMC? I know you're not, but we will have a few new names the regional Fed heads will be rotating through starting with January's meeting. Reliable data has been tough to come by, but they're a data-dependent Fed. What's your outlook in terms of monetary policy moving forward?
Well, I think be data-dependent. Look at the long-term trend, the balance between employment and prices, and stay resilient in terms of that message, and the North Star is the way I'd put it. So right now we expect one more cut to come based on the data we see, but certainly if we have a material contraction in employment, the Fed has to factor that in, and they can course adjust accordingly.
Any other big catalysts or potential market movers on your radar here, Jeff, that you think we should be paying a little bit more attention to in these final days of 2025?
Well, I think this is the longest I've gone in any conversation where we didn't talk about the elephant in the room, which is artificial intelligence. And that is going to cause a lot of winners and losers, macro and micro. We're following that closely, but in 2026, we think it's going to create some divergences. It'll be less about the tech play, a lot of other sectors that'll be the beneficiaries, and in some cases the losers from this mega trend.
Jeff Blazek is the co-CIO, multi-asset of Neuberger Berman. All the best to you for the Christmas holiday, the New Year, so much beyond that. Best to you and your family. Thanks for joining us.
Happy holidays. Thank you very
Happy holidays
much.
to you. Thanks a lot for joining us.
Appreciate it.
Josh, going to grab your microphone. Bobby, you and I are going to head that. Look at this, Bobby. The view down Broadway magically opens up. Hey, Court, here for the broadcast. We're bringing the latest poly market odds for an event contract as people are trying to figure out what are some of the higher profile IPOs that we can expect to hit market between now and the start of 2027. Up on Polymarket, the team from Once Upon a Farm gets 90% odds. That's, of course, Jennifer Gardner. SpaceX, 76%. Discord, 67% odds we get an IPO in the next year and a week. Freddie Mac and Fannie Mae, 65%. Anthropic, 60%. And OpenAI, 35%. The markets will resolve to yes upon completion of those IPOs by December 31st, 2026. Bobby, before we toss the break, we'll take a look at two NYSE notables here on the day. First up, the team from Live Nation just receiving a fresh price target boost from Evercore ISI from 168 up to 188. The stock is up in positive territory 4 consecutive days in a row. They did miss earnings 2 quarters in a row, sold off almost 30% throughout the fall, but so far shares of Live Nation are up about 9% from the start of 2025. And finally, we'll take a look at one of the big winners on the day. How about Novo Nordisk, up more than 7% after receiving FDA approval for its weight loss pill Wegovy, set to launch in January, completely erasing all of its November losses. Shares, however, are still down 40% from the start of this year. All right, at this point of the broadcast, we'll bring you an interview out of Solana Breakpoint in Abu Dhabi. That's where FinTech TV's very own Rachel Pether sat down with Joshua Sim of Solaire. Take a look.
Hi everyone, we're here at Solana Breakpoint in Abu Dhabi, and I'm very excited to be sitting with Joshua Sim, who's the head of product at Solaire. Joshua, thanks so much for joining us today.
Thanks for having me here.
So firstly, congratulations on your mainnet launch just a few days ago. Great achievement.
Thank you.
And before we talk more specifically about that, tell me a little bit about the evolution of financial market infrastructure.
I guess it's been evolving over the years, and it started first on digitalizing all of that, and then T+2, T+1. But at least the way we think about it is that it's not going to be T+0. It's not like we don't read -1 and just keep going from there. It's going to be more real time in the future. So if something happens, it immediately reflects on the financial services and the infrastructure. But to do that, we actually have to build a lot of the infrastructure from scratch, because a lot of the manual processes and systems in place, middlemen as well, makes moving from T+1 to T+0 or real time almost impossible. So you actually have to re-engineer the entire stack so that when something happens, you actually see that in real time.
And so the original premise of Solaire then, was it to build the infrastructure to facilitate that?
Yeah. So that's the main thesis behind Solaire. We're building out a really real time, low latency chain. And the infrastructure is built on top of a lot of learnings and techniques that the industry has learned from the AI distributed trading space. New technologies come out of there from high frequency trading as well. We've been taking a lot of those learnings and then building it into our products so that we can process insane amounts of throughput and support the kind of applications that we're seeing in the traditional financial world. Yeah.
I did read that it was up to 300,000 transactions per second that would be unlocked. What will the implications of that be?
Yeah, I think transactions per second, that's something that we were very much looking at as well. So we were looking to kind of push that from, I do think that we are probably one of the only chains out there that can do this level of throughput. There are a lot of other chains as well that are looking to say that, hey, we're doing 1 million transactions per second, but depends on the workload. So sometimes it's just a native token transfer, which is a lot easier to accomplish to get 1 million transactions per second that way. But the real world transactions that we actually see, things like swaps, lending, borrowing, actually is a lot more messy. And that's where it might actually slow things down if you actually try to run these real benchmarks. For our kind of benchmarks that we ran for the chain, is actually, we try to do it as realistic as possible. So we were running swaps in all kinds of different transactions. We were throwing these esoteric transactions at the wall, and we are pushing 300,000 real operations and transactions on chain. So yeah, it's a bit of a hot take, but we do think that we're the fastest chain in production right now. But beyond just transactions per second, we're also looking at latency, and also more about the UI, UX, and the processing of how that's being done, where a lot of, even like you can have a lot of transactions per second, but the experience could still feel like a back and forth. So it's really fast, but you got to check, and then you need a human intervention in the middle, and that can still feel a bit more slow on the UX, even though on paper it feels fast. So a quick example I tend to use is, say you have email, right? We used to be like, you send an OTP to your email and then you click refresh and you're like, is it done? I don't know. And then you check again and you're like, oh, let me hit this button a couple times.
It's a great example, yeah.
Yeah, so and that, like, even though the email might be sent really fast or like the latency might be low, but you're like, that human effort feels different, and then it feels slow, even if it's fast on paper. In the same way, I think crypto and like the blockchain in general has evolved in we post a transaction. Maybe we pull the chain and it's like, hey, is it done? Is it done? Is it done? Oh, it's confirmed. Okay, now you can do all the stuff, right? And that's where we're looking to kind of evolve the underlying infrastructure, so that we have callbacks and things where transaction goes out and almost instantly we know, oh, is it done? Yeah, and then that enables a lot of like complete changes on the UI and the user experience, where people send a transaction and they know that it's done, without having to ask them, is it done? Is it done?
Amazing. Well, thank you for all the work that you're doing, not only within the sort of capital markets infrastructure space, but also building up the ecosystem. So appreciate you coming on the show, Joshua.
Yes, happy to be here. Thank you.
Welcome back to the show. You're watching Taking Stock here on the trading floor of the New York Stock Exchange. Time now for the latest headlines in the worlds of fintech, crypto, and AI you need to know for your trading Tuesday. First up, all the crypto majors, Bitcoin, Ethereum, and Solana, all selling off about 1% or so today. Next up, the Department of Defense in D.C. expanding its Gen AI military platform with xAI's Grok models beginning early next year. The integration will give 3 million military and civilian personnel access to advanced AI tools. And finally, NVIDIA says it aims to begin shipping its H200 AI chips to China by mid-February. It is a significant policy shift after the Trump White House cleared sales with a 25% fee, although final approval from Beijing is still pending. Fintech anchor Remy Blair sat down with author and CEO David Struzeski at Money 2020 USA in Las Vegas recently to talk all about how to overcome obstacles in the world of business. Take a look.
When it comes to success in business, there are so many lessons to be learned, and sometimes setbacks are part of the story. So joining me here to weigh in and talk about his personal setbacks is David Struzeski, CEO of Sound Planning. But now that you have hindsight, I'm sure that you can step back and say, oh, I should have done this, or perhaps done more due diligence. But for you, what has been the key lesson now that enough time has passed?
It's a great question. You know, what could you do differently? You know, you only know what you know.
Yeah.
And so, you know, the thing that I would note here is that, you know, Bernie Madoff was able to deceive legal teams for decades. I mean, look at the California pension system, et cetera. And so you could say, hey, you were an idiot for falling for a sophisticated Ponzi scheme. But here's the reality. In hindsight, I believe that I learned incredible lessons, because you can't call me unethical. You can't say that I was not sincere about the families and the things that I did. In fact, my attorneys that said that I was going to pay them off, I was going to buy these notes 100% plus with interest. They were like, I've never seen this ever in my entire life.
Yeah.
And I was like, well, that's what I'm going to do. They're like 40%, 60%. I go 100%. And here's the thing. My team watched me take this on the chin. We grew together as a team. And I think that honestly, I wouldn't exchange, even though I don't wish that on my worst enemy, I would never exchange that season, because what it did is it caused us to grow roots in a way that we would have never otherwise had. But by the way, I became the #1 independent financial advisor in America 2018 and 19. As I was going through that process, God honored me and continued to progress and grow. It didn't affect any of our client relationships. Still work with some of those people today. And so, I think sort of in hindsight, moving slowly is important, but as I shared, I actually took 3 months before I ever even represented these contracts once.
Yeah.
So,
And David, you and I were at a fintech conference here, and artificial intelligence is a key theme, whether we're talking about payments or crypto digital assets. So I do want to ask you, what's your take on the role of AI, especially because you're talking about morals and ethics? So at this intersection, how important is the role of AI, and where do you think the guardrails should be in place?
well, AI is opening up a whole new world for fraud, waste, and abuse. And so the ethics that stand behind this is going to be really important. Hopefully we've got the right leaders that are the ones that are putting the prompts in and helping to build these things with the right rails and the right understanding around it. But there's a lot of very sophisticated schemes out there right now. And so our firm actually runs into them all the time. We've got clients that'll call and they'll say, oh, I've got, I need $20,000 or $30,000 for this or that. And we're like, hold on a second, can we just ask you a couple of questions? And what's amazing is, I think generally when you're a little bit older, which we work primarily with people that are nearing or entering retirement, people want to do the right thing. They don't want to owe something. They want to believe the best of people. And so it's really important to have, the right understanding. And so I think that the training of our teams, how we observe our own emails, how we take phone calls, and does the IRS actually call me or do they send letters? No, they do not call you. They send letters to you. Don't ever take that call and think it's the IRS. But AI is getting crazy. I mean, if you can duplicate voices, if you can do metahumans and all these things, that's a really, really, really scary reality. So we need to be more cautious than ever before about the people that we're working with and what's really driving their decision-making processes.
Well, David, thank you so much for sharing your story as well as imparting your lessons, your hard-earned lessons with us today. Thank you.
Appreciate you, Remy. Thank you for having me.
Let's do it, folks. Welcome back to the broadcast. Time now for the latest headlines you need to know in the worlds of startups, raises, and rounds on this Tuesday here on Wall Street. First up, AI pioneer Jan LeCun has confirmed the launch of his new world model startup, AMI Labs, with early fundraising talks said to value the company in the multi-billion-dollar package. Next up at this hour, ByteDance's private market valuation has climbed to $500 billion. This as TikTok advances a U.S. survival plan, including a binding deal to spin its U.S. business into a new joint venture ahead of the sell or ban deadline coming around the corner. And finally, Chinese AI chipmaker Biren Technology moving ahead with plans for a Hong Kong IPO as soon as January, aiming to raise up to $620 million in the process. Time now for what is always my favorite part of the broadcast, not just an incredible guest, but an incredible guest who just rang the closing bell. This is Raymond Moeller Jr., founder, chairman, and CEO of the Little Saint Nick Foundation. Welcome back to the New York Stock Exchange.
It's always a pleasure to be here, JD.
Loved having you in the group down here for the closing bell ceremonies at the NYSC, and you're no stranger.
Yeah.
Talk to me about not just the history with the foundation, but how many years you've been joining us here at the big board.
Yeah, I think our first year here was 2018, and it's just an honor every holiday season, not just to celebrate all of our giving from the year, but what's to come in the new year, and it's always a momentous event for our supporters and our foundation that I started when I was just 6 years old. It's pretty crazy to be here right now that we've helped 3 million kids across North America.
Coming on 22 years, all the way back to 2004. Can you talk to me about the early genesis for you and your family and some of the work that you continue to be most proud of for the foundation?
Yeah, when I was 4 years old, woke up one morning, had pain in my hips, and couldn't walk randomly. So my parents took me to a local children's hospital here in New York, and super traumatic, no idea what was wrong with me, and nothing to do while I was there. So at the end of the day, found I had a rare hip joint disease, which I made a full recovery after 2 years outside of the hospital. So when I found out kids had to stay there, I just couldn't fathom that. And my birthday is actually tomorrow, Christmas Eve, hence the name Little Saint Nick. And I decided to start giving my gifts back to the hospital I was in, and my parents said, if you want to keep doing this, we'll help you start a nonprofit. And it went from me giving to teaching others how to give, saying no matter how old you are, where you are in this world, you can make a impact in your local community.
That is absolutely incredible. Talk to me about, first and foremost, really what you hear from members of the community, the recipients of the amazing work you and your team at the foundation do. What are their stories that have most inspired you over the years?
Yeah, you know, we don't hear a lot from our gift bag recipients. It's our main program, which we're going to give out 18,000 of those this year. But the ones we do hear back from, it's life-changing. You know, a lot of kids that we serve in mental health facilities say that, you know, our programming changes their lives, and to know it's done by children and families in their local community, to have that personalized touch. You know, we're doing something that I feel not many are, and doing it every day of the year as well, not just around the holidays.
And rightfully honoring you and the work of the foundation here at the New York Stock Exchange. We've been doing now every year for several years.
Yes.
Talk to me about the impact on the community in 2025. What were some of the highlights here in the final days of the year?
Yeah, for the year we had over 100 events, all done by local groups, so really putting the giving power in the hands of the community. 18,000 gift bags, over 110,000 people positively impacted, and you know, our goal is to say, hey, let's get more people involved. Doesn't matter who you are, where you are, you can roll up your sleeves and give back through our mission. And this is just the beginning. Even though it's been 22 years and 3 million kids, we truly believe that.
Is that amazing? More than 2 decades, you're like, and we're just getting started here. Talk to me about what's on your radar for the outlook for 2026. And like you said, you're just getting started. I got no doubt it's being the founder of this amazing foundation. There's a lot of work you still really want to do.
Yeah, and we've gotten a lot of really good supporters from this year that we can build on for next year. Some even publicly traded companies like Aon and Pfizer have really gotten behind us on a corporate level, and anyone who gives monetarily to us, we say, hey, let's tangibly give as well and really create some cool, long-lasting relationships. So the spider webs on that worldwide level from some of those corporations, we can really do some cool things for tying it to being here and the power of giving and entrepreneurship and, you know, just the drive of it all.
I'm just about out of time. Quickly, what can people do if they want to get more involved or learn more about the work you've been doing?
Yeah, our website's littlestnick.org. You can check us out there for sponsorship opportunities, volunteer opportunities, to see our impact, all social medias, and you know, we're trying to get as many people involved as we can, not just in New York, not just in North America, but worldwide.
Raymond, what a pleasure to have you.
Thank
All
you,
the best
JD.
for the Christmas holiday, and a very happy birthday.
Thank
one
you
day
very
early, I
much.
want to say. Come back to the show anytime. You're always welcome here at the big board.
Thank you very much, JD.
Folks, don't go anywhere. Much more taking stock coming after a quick break, including the latest from Money 2020's Scarlett Sieber. Stick around.
Hey, I'm Scarlett Seaworth, Money 2020, and welcome to How FinTech Companies Actually Make Money. Today's spotlight, SoFi, the fintech that started by tackling student loan stress and ended up buying naming rights to an NFL stadium. Okay, SoFi's story is a masterclass in fintech glow-up. From refinancing debt to building a full-stack financial ecosystem, they've done it all. Here's how they make money. Remember refinancing your student loans? Paperwork, phone calls, it is a lot. It's not fun. SoFi said, what if we make this less depressing and make money? Here we go. 2011, San Francisco. A group of Stanford grads launched SoFi to help students refinance their loans. VCs are swooning. Millennials, that's me, cheer. Yes, we got to refinance those loans. And then SoFi goes full glow up. Mortgages, investing, insurance, banking. They even bought a stadium because why not? I want a stadium. Here's how SoFi makes money. Lending, student loans, personal loans, mortgages. SoFi earns interest and origination fees. Banking products, checking and savings accounts with interchange revenue from SoFi debit cards. Investing, SoFi Invest offers stocks, ETFs, and crypto. They monetize through payment for order flow and margin lending. The tech platform, SoFi owns Galileo, the API backbone for other fintechs. SaaS revenue all day, baby. And then the membership model. SoFi sells the dream of financial wellness, cross-selling products to keep you in their ecosystem. Bundle it up all day, every day. SoFi started as a loan refi shop. Now it's a full-stack digital bank with a side hustle and tech infrastructure. It's giving fintech main character energy, I'd say. SoFi's playbook is quite simple. Own the relationship, then layer on products until you're not just a lender, you're their entire financial life. From student debt to stadium lights, SoFi turned financial stress into financial flex. Flexing over here all day, every day. Back over to you.
Welcome back to the show. Tomorrow is Christmas Eve, but there is actually at least a little bit of economic data. We get jobless claims, initial and continuing claims crossing the wire tomorrow morning. No earnings. And as for the major market indexes, we actually do have a trading day. Closes at 1 o'clock tomorrow and a full day on Friday, the 26th, though markets will be closed, of course, for Thursday for the Thanksgiving holiday. Final tail of the tape here on this trading Tuesday, the S&P 500 finishing in all-time high record territory. The Dow, the NASDAQ, and the NYSE Composite Index in positive territory as well. Have a fantastic night, and we'll see you again tomorrow from the big board.